Today we got more solid data out of the UK. So today we got retail sales this morning. Big beat on expectations, specifically when you looked at the core retail sales measure. That came in way above expectations at 1.6% growth on the year. The market was expecting something more like 0.9% in the month of January. However, for the whole day, GBP has been getting absolutely slammed. How can GBP be getting slammed when the data has been coming out so good, right? Remember, just this week we've had solid CPI data, we've had solid jobs data. In the weeks before, we've had good PMI data, good house price data, good industrial trends data as well. Why is GBP heading lower? Well, the first thing that I've got to say, and we've been going on about this for days and days and days now, the dollar is on a bull run, okay? Why is the dollar on a bull run? We've discussed this, but just quickly, safe haven bid, right? US economy is seen as less exposed to coronavirus. So when it comes to coronavirus concerns, there's a lot of flows into USD. Obviously, USD's got its favorable yield. So the Fed rate is 1.5 to 1.75%. Compare that to the euro. They got a negative yield of 0.5%. That's the ECB's rate, right? Otherwise, also, we've been having strong data out of the US as well. So basically, things have just been looking up for the dollar, and the dollar's just been powering on and on and on. And obviously, when the dollar does well, that puts pressure on GBP USD, which is our main metric to look at how GBP is doing. But there's one other thing that we need to note as well that has been capping the gains in GBP over the last 2 months, and that is sour relations between the UK and the EU. Why relationship sour? Obviously, both of these, the UK and the EU need to negotiate their future relationship, but they can't agree on how to do it, right? The UK want a free trade deal, and they want the EU out of their fishing waters. The EU want the UK to follow EU rules as the price of getting a free trade deal, and they also want access to UK fishing waters. So these two key points are just massive sticking points which are keeping the two sides miles apart at the moment. And really, official talks are meant to start in the first week of March. This is when we're going to be really, really hot on this topic. It's going to be really difficult for these two sides to find an agreement on these issues, guys. We're going to be all over this theme going forward. We expect it to pressure GBP further in the coming months. Even if the data keeps coming out really good, like we've been seeing, we still expect GBP to come under pressure. That is pretty much it from me for now, and I will see you in the next one.